curiosity of the audience and for millions of the viewers who would be watching the show, both on television and online, people want to know that how Uday Kotak has become Uday Kotak. Walk us through your journey. How come somebody who started with a small operation of building lending is now one of the most powerful banker in Asia? What has made Uday Kotak Uday Kotak?
I think the most important thing which I have learned in life is common sense and middle class values. And that's the bedrock of all of us. And I was asked a question in 2009 January at the World Economic Forum by Fareed Zakaria. This is just after the global financial crisis. And Fareed asked me a question about, Uday, what do you think a bank for the future looks like? And it was a spontaneous question, and this is the answer I gave, which I believe is true even today. I said the bank for the future needs 3 human qualities. First is prudence, no excessive leverage. And this is a time when banks used to be levered 50:1, okay, in the post-financial crisis. So first is prudence. Second is no complex products. You had a world of exotic derivatives and everything else. So second is simplicity. And third, bankers believe they are masters of the universe because they have other people's money to manage. The fact is exactly the opposite. Banking itself is one of the most highly leveraged businesses, and therefore the bankers need humility. Therefore, the 3 qualities which I believe are crucial, certainly for banking, but for anything in our day-to-day lives, is prudence, simplicity, and humility.
Let's put our hands together to that. I think that's the secret mantra of Kotak Mahindra Bank, the real foundation on which the bank has been built, this franchise has been built. What's your big picture view on the economy? On one side, you've got pain, and the pain this time is excruciating. All the high-frequency data pointers are indicating that the slowdown, A, is back, and B, it's here to stay. Are we going through a cyclical slowdown or a structural slowdown?
No, I think, Nikunj, we've got to be clear. We are going through what I call as a cleansing and a purging process. Business in India happened in a particular manner for a long time. And the rules of the game were different. The rules of the game have changed. And I think business in general has taken a little longer time to recognize the new rules of the game. And it's back to my point, it is moving towards survival of the fittest. And if there are excesses, if there are issues, they will come out. And we will therefore see this cleansing process. And to a certain extent, I think Indian policy has taken a path which is not to throw good money after bad. And let's look at the first major example of that, which is where I have been given the responsibility, which was IL&FS. You go back to September 18, when there was defaults by IL&FS in the marketplace. The choice in front of the government and its major shareholders was to bring in new capital, okay, and paper over the problem. For whatever reason, the government and the shareholders took the tougher and the more difficult path, which is, no, we are not going to put good money after bad. Let us take the tougher call, and let's move towards a fundamental identification and resolution of the problem. And that is why you did not see the solution being good money being thrown out after the bad. And remember one thing, the shareholders there, between the state, which is taxpayers' money, the banks, which is depositors' money, and the policy holders, which is, or insurance companies, which is policy holders' money, they could easily have put money, or the state could have taken a decision to use those funds. We took the tougher call. Now, once we are taking the tougher call, it comes with its pain. And there is that which is playing out. And as I said that, yes, there was parts of a dirty white shirt. The shirt needed to be cleaned. The cleansing is on. All that we need to ensure is that as the cleaning process goes on, we don't tear the shirt.
But Mr. Kotak, with you really in the driving seat to solve the IL&FS crisis, why is IL&FS still work in progress?
Because it's a 340 company, it's a very complex web, and it took 20 years of work to create the structure. So, and now you have the IBC process in for NBFCs. At the time when IL&FS was set up, this is not under an IBC process. And again, I would like to here give confidence that we do believe that 50% of the monies will be received. And the biggest challenge we have faced in recent times was actually the distribution framework, which has just got cleared post the SR Steel judgment. So we are actually sitting on binding bids in many cases, and we are in the process of getting our distribution framework approved by the courts. And once that distribution framework is approved, things move faster. For a period of nearly 3 to 6 months, in the absence of a judgment by the Supreme Court on SR Steel, how do you resolve and distribute between lenders? So one is to get a buyer for assets. Second is how do you distribute it? And as you saw even in the SR case, for more than a year, the buyer was there, but the distribution framework was not in place. So you really need two legs for a solution. Number one, getting buyers for monetization or resolution through other means, including restructuring. And secondly, a distribution framework which will be acceptable to lenders. And in the case of IL&FS, unlike say an SR or even a DHFL, it is not one company. There are layers of companies and there are cross lendings. So when you have multiple lendings and multiple layers, different lenders' interests, depending on where they sit, are different. So if a lender is sitting in a special purpose vehicle, he will not want any money to go to the lender at the holding company. And at the holding company, very often the lenders are the weaker lenders, like pension funds and army widows and others. So where is fair and equitable? And that is one of the biggest challenges. I think similar challenges are coming through, say for example, in other NBFC resolutions. What is the role for unsecured fixed depositors? They are unsecured, therefore, if you follow the IBC waterfall, they should not get anything. It's only secured creditors who will take everything. But you're therefore in the middle of an IBC-like process where you have to be fair and equitable in distribution. And even more than asset monetization, distribution is the bigger challenge.
So what you're telling us, and again, this is going to be a huge headline for everybody, which is that you expect 50% of the lender's money would be coming back, and the resolution process will really pick up steam now.
Yes, the resolution, we are sitting with firm bids, but now once the resolution distribution process is accepted by the court, in this case the NCLAT, we will then be able to work on the distribution of the binding bids which we have got. So that is really the issue. Therefore, number of assets are with firm bids, waiting for clearance of the resolution and distribution process.
You mentioned in your opening keynote address the Darwinian's theory, survival of the fittest. The challenge with that theory is that when the survivors, they survive, it also leads to a lot of extinction. A lot of species in the Darwinian theory, they did not survive. So this survival of the fittest, do you think in India will come at a cost?
No, any solution comes at a cost. Not recognizing reality and kicking the can in the future creates a much bigger cost which may not be seen immediately. Therefore, the question is, which is the higher cost? A quick resolution, clean system, or kick the can for the future? And I think for good reasons, the policymakers have chosen that let's get to a cleaner system.
The Reserve Bank of India yesterday, in his keynote address, the RBI governor said, look, there is enough and more liquidity in the bank. Don't blame Reserve Bank of India for not creating liquidity surplus. Talk to bankers and find out why they are not transmitting and not lending. Is it true that banks right now are slightly risk averse?
No, I think my view, first of all, is let me just give a simple example in consumer lending. Before some of these challenges came in, say a bank or an NBFC was lending to a consumer with a CIBIL score of 650. Now, when you look at your portfolio and your delinquency in the CIBIL score between 650 and 750 was showing higher delinquency, what do? You raise the bar. Therefore, you increase that from now on, I will give only if the Credit Information Bureau score is above 750. So people who were getting money between 650 and 750 start getting excluded. At the end of the day, let's be very clear. Banks are leveraged institutions. We have got 10:1 leverage or more in many cases, and in some cases less. With that level of leverage, one of the first dharmas of banking is if you lend, you got to get your money back. Full stop. And if you don't follow that dharma, you better not be in banking.
Okay. You talked about this consolidation in the banking sector. Now, a decade ago, let's say 2 decades ago, private banks were small, PSU banks were large. What we've seen is that they're gaining market share, but right now there is still a lot of headroom for private banks to gain. Do you think this would be in work in progress, and 10 years from now, private banks and PSU banks would be a 50-50 split?
You know, I have a slightly different cut for India. I don't think about private banks and public sector banks. I would think about it more as Indian-owned and controlled banks as the basis. And for me, there's no difference between public sector and private sector. We are all here for building India. And I consider myself an integral part of that.
One aspect which you missed in your keynote address was that you did not mention on the issue of voting rights. On voting rights. As an Indian entrepreneur, the fact that you've created a great franchise and the fact that the voting rights in the financial sector and for banks are capped, do you think for an entrepreneur who's creating long-term wealth to bring voting rights down, perhaps may not be a great idea for future entrepreneurs to do something big in the banking sector?
No, my view is that at the end of the day, as long as you have the best governance or quality governance, voting rights are important only up to a point. Beyond that, it's the quality of the mandate you have, the governance of your board, your management, and I genuinely believe that there are 6 layers of governance. Management, boards, institutional shareholders, auditors, rating agencies, and regulators. And as long as you handle these 6 pillars of governance, while you need a minimum protection on voting rights, and which I think the Banking Regulation Act protects up to 26%, I think that's good enough.
Okay. You've been a big votary of corporate governance. If I look at Indian stock markets, Indian companies are trading at a premium to global companies simply because of the fantastic corporate governance in HUL, Kotak Mahindra Bank and HDFC Bank has. But given the kind of news flow we've had on corporate governance, at least in the last 6 to 12 months, is there need and is there serious need to improve corporate governance standards in India?
You know, it's an ongoing thing. When I was asked to chair the SEBI committee, which was about just 2 years ago, we had an intense debate on separation of the role of the chairman and CEO. And here again, I want to clarify. Our committee recommended separation of the role of non-executive chairman and CEO. Our committee did not recommend not allowing relatives. We were quite comfortable as our committee in terms of our recommendation that the non-executive chairman could be father and the managing director could be son. Therefore, this is an additional layer which the SEBI and the government have decided to put. I think there is some debate on this in the corporate sector, but as far as I'm concerned, separation of the role of the board, which is governance, and the role of management, which is management, I think that separation is a good thing.
The view in the market, at least in the financial sector, is that private banks are not lending to corporates. Private banks are not lending to infrastructure. India needs infrastructure. Who will do all the heavy lifting of credit then?
No, we are very happy to lend where we feel that our money will come back. And I'm absolutely clear about that. And if infrastructure has to be built, then the framework for infrastructure has to be clear, where lenders' money is not put at risk. So finally, that is where the equity owner takes the risk. The equity investor or the equity owner or whoever it is, that capital must be first wiped out before the lender's money is at risk. And as long as we have that very simple finance 101, I'm okay.
But in general, do you think there is a lot of, there is very little respect to equity by the current administration? If I look at what's happening to power, telecom, large areas, the equity of a promoter is not respected very well the way it should have been.
No, I think it's more complicated than that. Yes, I think there is an issue of dues, respect for contracts. I mean, particularly in one state where contracts are being uh, reneged on or not honored. I mean, that's not correct. So that, I think I completely agree that a contract is important and we must respect that. But other than that, I think equity owners took some risks which in retrospect did not play out. Many businesses got into infrastructure in 2005, 6, 7, 8 on the basis that we will come in and get into this infrastructure and be later able to manage policy. We will change the policy. Unfortunately, the second did not happen, and therefore they were stuck into bad contracts.
When we met 10 years ago, you said, Nikunj, I'm very bullish on the India demographics and the way an Indian entrepreneurship, and I'm going to be building a bank which would be a retail-focusing bank. And you managed to build one of the most formidable franchise. For next 10 years, where is Kotak Mahindra Bank as a franchise headed? What could be the big picture? 10 years from now, hypothetically, if we are engaging on the same forum, what do you think we are likely to be staring at? What do you think we could be discussing?
No, the first thing, I'm a believer that in the case of a bank, liabilities are bigger assets than assets.
Liabilities are bigger assets than assets.
Therefore, building the deposit franchise sustainably over a long period of time is core to sustainable banking. And if there's one thing we are deeply committed is to building, number one, low cost and sustainable deposit franchise. Number two, banking is a business of risk. But I am a believer that the returns must be commensurate or better than the risk you take. And therefore, if there is an X amount of risk, the returns out of that risk should be X plus. Most of the time, bankers make a mistake in pricing this risk. And in that context, I remember one of the important maxims we have at Kotak, which is return of capital is more important than return on capital.
It's very easy to lend, but very difficult to bring money back.
And therefore, as long as we think we can get a good return commensurate or better than the risk, we will lend. Third, we love knowledge and franchise businesses. Businesses which are built on brand, reputation, and knowledge and skill. And those are the businesses which don't require financial capital. Therefore, keep on building those businesses. And fourth, digital is here and real. And therefore, how well you can manage a world which is a combination of digital and physical, that's the future. And these are our four mantras: low cost and sustainable deposits and building of the liability franchise. Number two, take the risks, but must get disproportionate returns for the risk. Knowledge and skill and franchise businesses matter, and digital is our present and future.
All the disruption what we are seeing in the world right now, do you think that disruption is unlikely to change the Indian banking sector and the importance of bank branch would always be there?
I think so. I think bank branches will continue to have importance, but I think the density of the branch network need not be as high as it was in the past. So digital will help reduction of density of the network, but the network itself will continue to be required.
When Uday Kotak looks at his journey as an entrepreneur, as an investor, as a banker, what is one thing you would like to change about that? About your journey?
No, I think about my journey as a train without destination. And I am a great believer that the fun is in the journey, not the destination.
So no regrets that you didn't become a professional cricketer?
That is the only regret. That is the only regret. But you must know one thing in mind, which is that I was hit by a cricket ball. And I had a brain surgery when I was 19 years old. And that changed my life. So my family stopped me from playing cricket. Or else I would have been a sportsman and probably now talking to you about cricket and sports, which is a very important passion for me.
So do you think Dhoni should come back? Do you think Dhoni should come back in Indian team?
I am a believer that, today I read a very interesting thing that comparing Kohli to be one of the greatest stars on the earth. I think, what I believe is when we make people superstars, we forget the sweat, pain, toil, passion and purpose which has gone into building them. And people succeed because there's passion and purpose, and they don't care about accolades. They just want to be good at what they are. And that's the pleasure of anything you do in life.
Well said, Mr. Kotak. Thank you for your time, and thank you for
Thank you.
delivering the keynote address, and thank you for setting the tone for today's event.